So today we are going to be dealing with what's it called? We're going to be dealing with forex features and forex basic terms. So let me go on trading view. Trading view. Let's start with that forex features and forex basic term. So let me open my charts where I will just it's open already. So I've done a sort of breakdown for the new week. But that aside, let's deal with what we have today. So what we have today, we're talking about forex, forex features. That's what we're going to start with today. So forex features, we have number one, we have the forex broker. The forex broker, we have MT4 and MT5, which in hand side, MT means meta trader. Then we have trading view. Trading view is what you can currently see that I'm using to look at the charts. We have trading view. We have my FX book, my FX book, and we have number five. We have Telegram. If somebody just came in, let me accept that person. So we have Telegram. Okay, accepted. So now let's begin. We are going to be starting today with the forest pictures. The first one we're going to talk about. Sorry, we're going to be talking about the forex broker. So what is the forex broker? So this forex broker means they are financial service firms that offers clients the ability to trade foreign currencies. I talked about it when I was talking about the financial market. Like I gave a briefing about everything when we're talking about the brokers and everything on that my first video on introduction to financial market. So this is just giving you more insight on what it means. So a forex broker is a financial service firm that offers its client the ability to trade financial currencies. Forex is short for foreign exchange, like I'm sure we both know that. So forex brokers firms that that offer its client the ability to trade foreign currencies, the ability to trade foreign currencies. Okay. So the forex brokers they operate as a middleman between you and the market. The forex brokers are middleman. Sorry, let me bring this out. They are what? They are middlemen between you, middlemen, or middleman between you and the market. Meaning that if you want to trade a foreign currency, let's say you want to trade forex now, you have to have a forex broker because they are the one who give you access to the financial markets to be able to trade foreign currency. So they are the ones where you trust your money with. You put your money in their account, they give you access to the financial market and so on and so forth. In other words, in order to find a buyer or seller of currencies in whatever foreign currency pair you want to trade, you have to go to a broker. So that for the forex brokers are people who match you up with sellers or buyers in the market. So that's that about forex broker. So now we have MT4 or MT5, like MetaTrader 4 or 5. That's what that's all about. So MetaTrader 4 or 5, um, let me say, also known as Meta Trader 4 or 5 or 5. They are electronic trading platform. That's what this MetaTrader 4 or 5 are. They are trading platforms. As we have forex brokers, we have trading platforms. So the first thing, you have to have a broker, then you have to have MT4, MT5, so that you can be able to access their trading platform. The broker gives you the ability to trade foreign currencies. They give you and they give you a firm where you can put your money. The MetaTrader 4 or 5 are trading platforms where you go to, trade. So they are also widely used by online retail foreign exchange traders. Um, that's what it is. They are used by traders. That's just what MetaTrader 4 or 5 are. So, and there are actually two. There are two different. You have MetaTrader 4, you have MetaTrader 5. The MetaTrader 4 is an old version of the MetaTrader 5. MetaTrader 5 has new features, but you can use either of them. Either of them. So that's it. So now we have the next one. We have Trading View. Trading View. We have Trading View. So now this Trading View in hindsight, what does it mean? So Trading View is an online based chatting platform, an online chatting platform now, online chatting platform. Yeah, with lots of useful features, with lots of useful features. This this chat, this platform I'm currently using to type this all out. This is what we call Trading View. Let me take let me take it back. You can see here on my what's it called, on my chart, you can see that this is Trading View. So we are currently the Trading View chatting platform. So let's continue. Um, the next one we have my FX book, my FX. So this is my FX book. What does it mean? My FX book was known as the first community for forex traders. The first community for forex traders with the ability to connect with your trading account. Okay, someone you just entered the room. Let me accept. So that's that. Also, my FX book gives you the what's it called? The uh, uh, capability to analyze your trading system, to monitor your trading habits, to monitor your systematic analysis inside out, to help you keep track about what you're doing right or wrong in the market. It's just a platform that gives you features like that. Then we have the next one we have Telegram. 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 So we all know Telegram. Telegram is just a communication platform, where you can communicate with traders. Most financial traders tend to use what's it called? Telegram. The Telegram is an online messaging app. That's all. App. That's all. So that's the forex features. Now, I said we're going to be dealing with forex features and forex basic term. So forex features, we're done with that. Forex basic term. What are they? Now, this is where you have to pay really good attention. Forex basic terms. These terms are very important. These terms are very important. You have to keep it in mind. This is a minute. Okay, so we're done with Forex features. Now we're dealing with Forex basic term. So Forex basic term, we're going to be talking about volume. We're going to be talking about spread. We're going to be talking about leverage. We're going to be talking about stop loss. We're going to be talking about take profits. For those of you who like don't know how to place signals, or when you get a signal, you don't know how to place signals, all those kind of stuff. This is very useful for you guys to like know. Like it's a very useful information. All this information are very crucial. You have to like be aware of their meaning in the market. So volume, what is volume about? So in forex trading, volume is the number of lots traded in a currency pair in the entire market with a specified time period. So let me type it. Volume is the number of lots traded in a currency pair or in the entire market within a time period. Okay, good. I am using my time to type all these out because I want you guys to take note of all this information that you get. So also volume can be said to be a measure of trading activity. It is simply the amount of currency that changes hands from buyers and sellers. So that's what it means. So let's say you're buying or you're selling a currency pair. The volume between from the buyers and seller is just what volume is talking about. So now let's go to spread. Spread. Spread is what? Spread is the difference. The difference between a forex broker broker's sell or buy rates when exchanging or when trading, let's say when trading currency pair, when trading currency pairs, currencies. Yeah. So this spread now is the difference between what's it called? The sell rates or buy rates, a forex broker charges you as a trader to trade. So this spread now is the commission because, like I said, forex broker over here, I said forex brokers are firms that offer its client the ability to trade currency, to trade foreign currencies. It's the middleman between you and the market. So now the spread is the charge rates that they charge you as a trader to give you that grace to trade the financial market. So that's all it is. And the spreads can also be narrower or wider depending on the currency involved. So different currency pairs have different spread involved. The time of the day that the spread is the time of the day that a trade is initialized, that a trade is taken in the market, the spread is can change. It can charge you different type of spread depending on the economic condition of that currency pair that you're trading. So now the next one we have here is leverage. So all these informations are important because this will help you determine the currency pair you'll be looking to trade long term, the type of spread that they charge, how much will you be charged. So these are why these are important. So leverage is the use. Kindly mute yourself.
Is processing.
Kindly mute yourself.
Yes,
Okay, good. So leverage is the use of hold on. Okay. So back to it. Leverage is the use of what? Leverage is the use of borrowed funds. Borrowed funds to increase one's trading position. Meaning that most of all these forex brokers here, they give us leverage on our accounts. They borrow us some funds so that we can place certain position size in the market. There are sometimes where a trader may have a $10 trading account, and then may have a $10 trading account, and then you'll be able to place a trade that is more than your account size. Why? Because they borrow you the funds, they give you leverage in the market. So, like you said, the leverage is the use of borrowed funds to increase one trading position beyond what would be available from their trading balance alone. Yes. And forex traders often use leverage to profit. So, another information that's crucial you must know is that you can use leverage can be used to profit from from small price change. Small price change, small price change, and it can also, however, it can also amplify your losses. And also amplify your losses in the market. Let me make this smaller. I think okay, good. It can also amplify your losses in the market. So these things you have to like take note about them. So the next one here is which we have is stop loss. Stop loss. Well, let's get back to it. So stop loss now. As the name implies, stop loss is an order to trigger a stop in the market. An order. This is the order you give to your broker. This is the order you give to your broker to stop you from a loss. So it's very crucial to have your stop loss placed in the market. Like you must have a stop loss in the market. It's a very good management system. It prevents you from acquiring like maximum losses in the market. Yeah, you can enter this price as you're just entering a trade, but preferably after the trade has started running. It's best to enter a stop loss before you trade and also after a trade. Why it's best to enter it after a trade is because let's say you want to place a trade now, you cannot know a certain point you want to enter the market because it's only if you're using buy stop orders or sell stop orders that you can really set that price where you want to enter in the market. And sometimes the broker may not put you into the market at that time you're looking to enter at a certain price. They may use it, it may be like one pip away from your initial entry price if you're using a pending order to take your trade. So as the name implies, stop loss is the order you give to your broker to stop you from a loss. Stop loss is used, to stop you out of a trade. It can be used to help you determine how much you want to risk in a trade, which we then come to lot size. Lot size is very important too. So we're talking about lot size. And stop loss is a very good management order that helps you from acquiring too much loss in the market. Taking a loss in a forex market is just part of everything in trading. Taking losses is vital. You must take losses to learn. You are going to take several losses. Also, you are going to make what's it called? You are going to make losses in the market. So it's normal. Shey you get. So the next one we have here is take profits. So take profit is that order that you give to your market to take you. The other is the order you give to your broker. This is the order you give to your broker to take you out of the market and lock in whatever profit you made. Take take you out of a trade and lock in whatever profit you made. Profit you made on that trade. So you can as well, take notes of this thing. It's best to like document all this information down because all of this that I'm telling you now, I have it on my notes. While I was learning also, I took all this stuff down, like I wrote them down, because I knew that one day I'll also be, taking classes on it. So, however, you must have a set price at which you want the market to give you your profit. Why? Because you cannot just place a trade and let the trade keep running because it will keep running in your direction and go against you eventually. The market cannot keep going in the direction which you place the trade. It's a very good money management order that helps you to close your trade once price gets to your profit point, meaning that you must have it set. Like we are going to also be dealing with trading plans soon, where I will tell you why it's very important to have a trading plan and all of that. So we dealt with leverage, spread, volume, spread, leverage, stop loss, take profit. The next one we have on the list is our lot size. Now this lot size is crucial because when you're about to place a trade, you have to know how much money you're willing to risk on that trade. Your lot size will determine Your lot size will determine how much you're willing to take a trade, also with your stop loss. You understand? So this lot size, I have to take my time to, like, sorry, you have a question. Okay, what question do you have? Can go on ahead and ask it.
Okay. My question is concerning that stop loss. Yeah. When you put in a trade, then
Yeah.
you set your stop loss, then the trade has gotten to that place that you set your stop loss.
Okay.
But what if after you pass the way you set for stop loss, then it later goes up? Will the market still continue? It will have closed by then.
No, like I said, stop loss is the order you give to your broker to stop you from a loss. Meaning it's also an order you give to your broker to take you out of that trading position. Like it is taking you out of that trade entirely. Why we are using stop loss most of the time in the market is so that if we are wrong about the trade, like the trade is not going, what's it called? Let me give you an example. Let's say you're looking to buy in an uptrend like this, yeah. You know that
Yes.
uptrend, you're supposed to enter at a position. Let's use this. You're supposed to enter at a point like this. Let's say like this, yeah. You're supposed to enter at a place like this. So let's say your entry point is look at this digit here, 1.55 um 1.5500, and then your stop loss is 20 pips, meaning that okay, there's 10 more minutes before this is off, then I would send another link, then we'll continue. So this is your entry price here, which is 1.25500, and your stop loss price, which is 20 pips, 1.25300. Meaning that before the markets, let's say you enter at this point here. Normally, in an option, you're expecting market to go up a bit. Now, if the market does not go up in your direction and it's going against you, meaning that once price gets to this your stop loss point like this, you are out of that trade. That's what a stop order is for. It takes you out of the market when you're wrong. Take profits. Let's say we are using 40 pips as your. You also have to learn how to calculate pips, which we are dealing with in lot size. So we have to know about pips calculation. So let's say now, like I said, this is your entry price here. This point here will be your entry price. Here's your entry price where you're entering the markets. Here's your stop loss where the market will take you out if it is wrong or if your trade is wrong. And here's your take profits. Take profits. You know, here's your take profit. Here's your entry, here's your stop loss, and here's your take profit. So all these prices are what are being given out when you're giving a signal. You can see that sometimes when I send out a signal, I say entry price so and so, stop loss so and so, take profit is particular number. So those are what those stuff are for. Meaning that if the trade is going against me, against the signal that I may send, or the trade I will call out, meaning that that trade is wrong. So we are going to close that trade and probably trade another day where we see a good trading opportunity in the market. But if I give a take profit number and tell you set your take profit as 1.25900 as it is right here, meaning that okay, once price gets to this take profit, we are going to get out of the market with the profit we've made. I believe you understand that right now. And same
Yes.
way it is in a downtrend. Let's say you're trending downward like this, you know, you're trending downward, you use sell position. I also do, a a video, a video teaching how to use this trading view platform. Because it's crucial you know how to use the tools that are here on trading view platform. So now let's say this is a downtrend, you use sell position, You enter at 1.23400. Okay, no, 23300. You have a 20 pips stop loss. And in trading, you must not use more than 20 pips. That's your overall stop loss. You can use 15 pips, you can use 70 pips, you can use 7, 10, but more than 20 pips stop loss is too large for that trade. If you have a trade that is more than 20 pips, it's advisable you don't take that trade because now you're risking too much. So now this is it. Let's see our entry price is 1.2. This is our entry price here. This is our entry price here. This point here is our stop loss. And here, okay, here's our stop loss. Here is our take profits. Why is it? Here's our, let me type it. Here are take profits. Take profits. So this is this point here, take profits. Sorry. I believe you can understand now. It's crucial you know all these things. This is why some people, while taking signals, this is why they lose money. Because you don't know a particular point where that trader may have called that trade off. You don't know the entry point. You don't know the reason why they're actually taking, if they are telling you to buy a particular pair, you don't know why they are telling you to buy the pair. You're just there taking the signal because you know, okay, signals making money, blah blah blah, and so on and so forth. So that's it. So this is what this is stop loss take profit entry. So we are now going to go deal with what's it called? Lot size. Then we're going to deal with pips. Lot size. I'm going to take you guys on what lot sizes are, what lot sizes you're supposed to use on whatever trading position you want to use, on the account size that you have, those kind of stuff. You have to really understand lot size. You have to understand pips. Pips are crucial. You have to know how to calculate pips. Pips calculation on on what P are you trading? What pips are you supposed to be using? How many pips? What are the numbers? Just calculate this kind of stuff. So all of this right here, from here to here. Okay. I'm just using this to highlight it. You can screenshot it, take your note of it, watch the video over again so that you understand what you mean. Now, I'm taking you guys from beginner, like that beginner stage. Just want to, yeah, a newbie in trading, these are the things you have to know. You have to have this information because these are the things you'll be meeting in the market. This ones are just, learning about trading. We've not got into you're going to go deep into the strategy parts. You're going to go into psychology and you're going to go into risk management. So that's what trading entails. As a trader, you have to have your strategy. Then your strategy is what's going to help you build your psychology as you develop your trading, as you develop your trading strategy, because you have to find an edge in the market that works for you, something that you can identify over again, something that you've back tested over a period of time, as you have collected several data from the market. So those kind of stuff is what I'm going to take you while you're talking about strategy. Then when we're talking about psychology, you have to understand yourself as a trader. Psychology talks about the greed, those kind of stuff. So when we get to that area of lecture, we'll talk about that too. Then we're going to be working very strictly on risk management plan because having a strict risk management is what is going to keep you profitable. So now you can learn forex trading in a month or 2 months. But the journey after learning how to trade the financial market, after being brought into the financial market, after having a strategy that has been taught to you, the rest is now up to you for you to develop your psychology as you grow as a trader. Then you have to, develop your risk management as you go as a trader. That is why trading takes time to learn, because trading is you versus you. Trading is just a skill that can be learned, as quick as possible, as fast as possible. Also, you have to develop the skill. The same way you go to school and you learn a course for like 4 years, the same way you come to trading and you say, okay, you're learning a course, because this is actually a course. This is actually when you go learn tech, or when you go learn how to code, this kind of stuff. When you after you learn how to code, after learn how to do it, you have to still go on again to go practice, 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 learn those code, learn what they mean, so that it becomes a part of you. So that's why you see all these traders out there, our guy in the game, those people who are making us good money in the market. They've spent their time, they've gained the experience that they need in the market. What they teach you may be right, but you as a trader, you as a beginner cannot have that experience over the years that they've had. So that's it. That's forex trading. So now we're going to be going into lot size and pips, and then I think we'll be done for the day. Or I'll check something that we can quickly skill through. So we can move. Okay, stay tuned. I'll send a new link to you guys. I want us to really go into the strategy, psychology, and risk management part, because that's what we are really going to be dealing with.